There has always been some skepticism around cryptocurrencies and digital assets, but you've got to the stage now where for Bitcoin, the total market value is north of $1 trillion. It trades multiples of what the FTSE 100 trades in a day. It's going to become ever more relevant. I'm Stephen Coltman and I'm head of macro at 21shares. I think in the future people will look back at the current state of financial services and think about it in the same way that people who use digital cameras today remember the old cameras where you would have to take your film down to the chemist, wait a few days to get it developed and then see how the pictures came out. What is expected to be potentially the largest market for blockchain and for cryptocurrencies is going to be agentic AI, where AI applications will not be able to manage their own bank account, but they will be able to transact when you authorize them through a digital wallet. And so when people have agentic AIs with permission to manage some of their financial activity, then you're going to see these AIs using digital wallets to do those transactions. So as more and more financial activity is done through AI and through AI agents, that's going to lead to a lot of growth in usage of digital assets as well. You've seen the winners continue to grow. So Ethereum, which is the largest protocol for smart contracts, you're seeing that again emerge as by far the largest network and is being used for stablecoin transactions and being increasingly adopted for consumer applications. You have Bitcoin obviously as the store of wealth, but then you're increasingly seeing enormous growth in stablecoins where people are able to put dollar cash onto a blockchain and then transact that seamlessly with instantaneous settlement 24/7 across border, much more cheaply than with previous sort of banking transactions that people would rely on. So for things like remittances, that's making a big difference. You're seeing also applications in terms of prediction markets, which have become very positive based on blockchains. You're seeing very rapid growth in decentralized collateralized lending applications using blockchains. For people who want autonomy and to be able to transact on their own terms, this is not generally appreciated in developed markets where things have been quite stable for a long time and people take it for granted that they can engage in financial transactions, access their money in the bank, and have some stability in their purchasing power. You are seeing globalization starting to fracture. For example, when Russia's foreign reserves were frozen, that was a big shock, I think, for a lot of countries in terms of the safety of where they keep their own assets. And there's a growing appetite for a neutral global asset that is not subject to any jurisdiction in terms of who can control it. And you've seen big increase in demand for gold from central banks around the world on that basis. But Bitcoin also fits that profile in terms of there's no country that can control the Bitcoin network and freeze the assets on a blockchain. Diversification is the only free lunch in finance, and particularly recently when you've seen equities and bonds trade much more in sync, it's been hard for institutional investors to find effective diversification. Digital assets have a unique collection of properties that other traditional assets don't have. Exposure to technology, to the pace of technological adoption. They have exposure to inflation. And it has this third property that is more akin to gold in that it doesn't have any counterparty risk. That gives institutional investors another choice, another option to add to their portfolios to bring in additional diversification, which is very valuable. And then finally, where you can get real increases in demand is if you get to that point where the debt burdens become unsustainable, banking systems come under pressure, and then there's going to be a huge desire to be able to manage your wealth in an asset that is not exposed to the banking system.